high yield dividend warriors are rejoicing, celebrating on their streets. Their dreams of somehow retiring by December with an $80,000 portfolio, all on margin, is apparently now going to happen even faster. You see, the reason they are celebrating in the nude with each other is that the fund provider YieldMax just made some earth-shattering changes. YieldMax has shifted its fund-of-funds ETFs, YMAX and YMAG, from monthly dividend payers to weekly dividend payers. YieldMax has also shifted the distribution cycle of all of its ETFs to now be staggered throughout the month. Wow, what does this change? Absolutely nothing. As I showed in my last video, getting paid weekly versus getting paid monthly makes no difference from a cow-pounding perspective. In fact, I actually argue that you may actually be better off just getting paid monthly, as weekly payments could be a significant downside. But what did the very smart high yield dividend warriors do? They decided to comment and open their mouths saying that I rigged mathematics to prove my own narratives. Despite mathematics being around for thousands of years, I somehow found a way to change math to fulfill my evil plan of showing you that weekly versus monthly payouts makes next to no difference. This is called being delusional. The high yield dividend warriors have so much tunnel vision on greed and becoming rich overnight that they can't even face the truth when it's in front of them. What actually happened was the success of the roundhill investments, which often pay weekly, has many in the community feeling entitled. They demand the leader of YieldMax, Jay, change the distribution frequency. So this is supposedly an email from Jay when one of the high yield dividend warriors reached out to him and said, hey, you better start paying weekly, otherwise we're gonna pull out our money. And this is what they shared on their servers. Apparently Jay, a Wall Street professional, could not understand why anybody would care about getting paid weekly versus monthly. It's almost as if Jay knew this is the most ridiculous thing to look at when people should be looking at, I don't know, other important factors such as the quality of the ETF, the strategy of the ETF, the long-term outlook for the ETF. But no, let's just focus on things that don't matter, like how frequently they pay out dividends. But Jay, he's a really good businessman. He knew the dividend warriors were not bluffing. They were serious about their demands. So they probably would have transferred all their hard-earned capital losses from YieldMax over the year to Roundhill, and that would have been big losses for him. These fund providers collect money on the assets under management. So he complied. He gave the warriors what they wanted. He made these changes. Stuff that makes absolutely no difference, is purely cosmetic, and maybe makes you feel a little bit better, right? All those little dopamine hits to appease the entitled warriors. Now, it's certainly a good move by YieldMax, but let's take a look at how their two fund of funds have done so far. Let's start off with YMAX. So we can see since the start of the year, YMAX, which originated on January 17th of 24, about 8 months now, it has given a total return of 9.89%. That's with dividends reinvested, so I don't want anybody in the comments saying I didn't factor in total return. And SPY, the S&P 500, has returned 19.75%. So this one has severely underperformed the S&P 500 by just about 2x, which is pretty disappointing. Now, let's take a look at how YMAG has performed. Now, YMAG has actually performed a lot better. It's actually outperformed the overall market 18% to 15.22% by the S&P 500. Now, do I think this outperformance will last? It could possibly continue this impressive trend, especially if we have a slow and steady rise. Yes, that would be optimal for ETFs like this, but huge swings up or down, that's really going to erode this fund because of the capped upside / capped uncapped downside nature of these income ETFs. Apparently, the YieldMax funds also had some other news where they changed their strategy to now employ more flexible strategies like covered call spreads. This will aim to reduce NAV decay and capture more upside during bull markets. NAV decay is another word for NAV erosion. We shall see how this actually works out, but just know this will likely reduce those high yields, right? There has to be a trade-off somewhere there with risk and reward. Though preventing NAV erosion is way more important than high dividends. Now, a covered call spread involves selling a call option while simultaneously buying another call option with a higher strike price. The strategy is used to generate income while limiting potential losses. By doing this, you're capping your potential upside, but you're also limiting your downside risk compared to just selling a call option. By selling the call option and buying the higher strike call, you participate in most of the downside movement of the underlying asset, but with some protection. This means that the underlying asset declines in value, the income received from selling the call option can offset most of those losses, reducing the rate of NAV decay. Now, unfortunately, what I just said will go over the heads of most of those warriors. Soon enough, they're going to be complaining in my comments,
why are the dividends lower? Does anybody know why the dividends are lower?
They will ignore YieldMax's risk section, which is on the bottom of this news relief. There's a very particular part in here that says you are not guaranteed a distribution under these ETFs. They are variable and may be significant from month to month, and they may be zero. So many people think they are entitled to an ETF's or a company's profits. You are not entitled to anything. They cannot pay you a dividend, and that would be totally fine. They're not going to be indicted for not paying you a dividend. Dividends are never guaranteed. Just because they have done so in the past, that doesn't mean that they're going to pay you in the future. So anybody's claiming that they're going to get $10,000 for the rest of their life, they are totally delusional. They have no idea what they're talking about. It takes a special type of specimen to truly believe that they're going to retire off an $80,000 portfolio all in margin. All right, guys, that's my little rant. Let me know what you think about YieldMax's new changes to their ETFs. My entire $200,000 portfolio is available on the Patreon. You can see how I've beat the market over the last 3 years and continue to do so. Make sure you leave a like, hit that subscribe button, and I will catch you on the next one.
I got to do a calculation. So 1,000 share, $1,000 divide by Tesla, Coney, Misty, divide by 3.